Let's welcome Jorge Montepeque, Managing Director of Benchmarks at Onyx Capital Group. Jorge, your thoughts on OPEC's decision to once again accelerate supply increase? It's not a surprise. Should we expect now that OPEC Plus are going to, the 8 countries, we have to say, we keep quantifying that, qualifying that it's not 20 odd countries. We're talking about 8 countries that are part of this 2.2 million barrel a day cut. They've now sort of reversed more than half of them. Would your expectation be now that they'll see through the whole thing and that we should expect by the end of the third quarter that all of these cuts will be reversed?
Well, Sean and dear audience, my position has been that the numbers stated by OPEC and the group of secondary sources are neither credible nor real. But everybody that writes or essentially comments about what is happening in OPEC takes what I call the fake baseline as reality. The fact is that OPEC has been producing over what they have stated. So when they say they are increasing the quota, they're not, because the majority of producers are already producing at max. And the only few that could increase production even more, you can count them with maybe one finger, meaning Saudi Arabia, because the rest are pretty much at max. So the analysis by definition is so flawed because the market by the OPEC members is producing as much as it can.
So this is really, they failed to bring production down to quotas. So now they're bringing production up to quotas. Ultimately, they're bringing quotas to production.
They're bringing the funny accounting to reality, little by little. But nothing is really changing in terms of supply, except from Saudi Arabia, who is increasing production.
But so when you consider 400 is the announcement in April and May, June, and now July, of that 400 quota increase, how much do you think is actually new barrels of supply?
Maybe 150, and that would be by Saudi Arabia. But Saudi Arabia is going into what I call this summer burn. And they may consume as much as 400,000 barrels a day during the hot summer months. So if you notice, already for 2 consecutive months, Saudi Arabia hasn't increased the exports into Asia. And I don't think they will very much this month, because they themselves need the crude to keep the electricity production up and the temperatures down in their homes. So the market, in my opinion, is tighter than it looks. And this is why the market has reacted the way it has. There was a huge prospect of an internecine battle between the producers by Saudi Arabia producing more and essentially spanking the Iran members. This was the background ahead of the meeting this Saturday that was happening in the past few days, where Saudi Arabia was threatening to increase production, not by that little bit, but going up to levels that would really reduce what they had voluntarily decreased. That was the fear in the markets on Friday. So Friday, the markets fell because the sense was in the air that the Saudis were going to go, we're just going to produce, because nobody's really helping us in maintaining the prices up. And as you know, everybody is suffering from the low oil price, from Saudi Arabia to UAE, who are raising a lot of money, and also even the US majors who are firing people and also selling assets and all of this. The beneficiary, of course, there's always one, is the end user globally. But that sense of that battle calmed down as soon as the statement came out, because the statement was essentially, we're just going to reduce, we're going to reduce the accounting to bring the accounting up to where it needs to be.
So, Jorge, as we move into the second half of the year, and of course the announcement on Saturday was for July, which is the first month of the second half of the year. But if you take the narrative as you articulated, that these are fake sort of increases in the sense they are essentially quotas catching up with where real production is. As we move into the sort of the second half of this 2.2 million barrel a day supply increase, quota increase, does that become more real? Does those supply in the next round of increases and the next, are they still fake, or as we go into the second half, that these increases actually become a real additional supply and so a greater downward pressure on prices?
Well, I like the comments about this being a soap opera. Maybe that's a little disrespectful, but it does feel that way. But let's go a little bit into those issues. The UAE has announced that it will actually reduce exports. They made an announcement in their official website changing the numbers. And they are the country that has been under a lot of pressure by Saudi Arabia to essentially produce more in line with what they were supposed to be producing, rather than just having a number that is for public consumption while exporting a lot more. So I feel the other way, that in itself, this wall of production coming in, actually, there may be a little bit more discipline in the market in the coming months. And that Saudi Arabia is not ready to flood the market, but is being very careful about releasing in line with what the market demands. Trump
expects, right? And expects ultimately the market's got used to this 3 month, each month sort of accelerated increase, but it's still in alignment with the announced agreement that was announced a year ago, I think, nearly, when they first put out this supply return plan. So it's still within the corridor of what was announced, what was agreed. It's accelerated, but at least it's what the market expects, the market knows, and it's not a surprise.
Yeah, and my position is that the market is misinterpreting all of this data because the narrative has been fake for so long. And I was thinking that OPEC needs to come out of that one. And I was thinking just by myself, right, how can they address these issues and align against with reality? And I think the only possibility they have is by saying that there have been technical difficulties with the numbers and issue what the real production is, because nobody can analyze. And it is clear that because of this fake narrative, prices were higher than they should be. But markets are not dumb. They eventually react to supply and demand, and there was too much supply and prices fell to the 60s. And if not, as we saw for a few days, to the 50s. Now, the markets are actually a little bit tighter than all the narrative says. So that's why we are coming up towards the 65. But essentially, nobody can analyze anything, because if you have OPEC with essentially fake narratives, and then you have Trump pulling whatever lever that blows up on his face every couple of days, it's like, how can you do a long-term analysis on this? I was talking to some people from Saudi Arabia, and they said, and I am with them 100%, our analysis can only be like for the week ahead. We cannot really analyze things for the next 6 months to a year, because the data keeps on changing and the pronouncements by Trump are always altering the market. So where are we right now? We are heading into a summer that may be tighter than expected because of the summer burn, maybe because of some more discipline by the UAE. And please note that the UAE is going to burn or well, refine more merban at the Ruwais refinery and export change it into UZ for the exports. That will change the mechanics of Dubai. Those are real things.
And also, you're seeing real announcements for sort of curtailing increased investment in the shale basin in the Permian Basin. There's some significant cutbacks being realized there from the point of view of new supply or even maintaining existing supply.
Correct. So the line for the long term has started to change up a little bit. The big downside, and here's where Trump comes in, is that he can wreck global trade so much that factory demand decreases, shipping demand decreases, all these things that put people on edge. So, but other than that, the line for oil itself is healthier than it has been for a while. Because, and I'd like to say this phrase because it is so true, there is nothing like low oil prices to cure low oil prices. And we are in that phase right now that in the upper 50s to low 50s, some allocation of capital is going to be cut, where the majors are now watching their purses and saying, what do we need to sell? Which markets are being affected? And they're already in a reduction mode. So the seeds for a recovery have been already planted. If in addition, as noted earlier in this presentation, Trump and his administration decide to print actually rather than grow, rather than address the deficit, then we're in an inflationary environment. So Bitcoin goes up, gold goes up, and eventually oil will go up. It's not that people get wealthier, but the nominal number for oil will go up.
Jorge, on this sort of analysis of your previous comments, you mentioned that secondary sources were also part of the not quite correct or accurate data being presented to the market. Did I understand that correctly? That because that's obviously, I think, about 10 independent companies providing secondary data on supply to the OPEC secretariat.
Yes. They're under pressure to produce numbers to the downside. There are even cases I heard 3 days ago of shipments being measured as min cargoes. It's a term that they're not full at load port, but then showing up at discharge port filled to the max. So there is a lot of data. I'm going to be very straight here, data manipulation to project a market that is not producing as much as the world requires, and data manipulation to show quota adherence. During IP week, or IE week as it's known now, several of these secondary sources came to me directly to complain about the pressure they're under to produce essentially docile numbers. This is a very strong, it's not an allegation. I heard it directly from the sources, but this is what creates essentially a narrative to the upside, which is not warranted by the actual activity. And then you have major corrections because the market, as I said, the market is never done. It eventually finds out. So there is a need to clean up the data coming out from the secondary sources, but there is also a need to clean up the data that comes from OPEC itself. OPEC actually doesn't need secondary sources. They know exactly what they're producing. They need to bill the producers. They need to get paid. They know exactly to the last barrel how much is coming out through their export facilities. But they like to, mask it a little bit and pretend this and that. But eventually it bites you because the market reacts to real supply and demand.
If we look at that, just looking forward, Jorge, we had the discussion earlier about the the Ukrainian attack on Russia over the weekend. I mean, there's attacks every day, Russian on Ukraine, etc. But this sort of announced one. But the lingering in the background here is a another sanctions bill in the Senate, which has about apparently over 80 senators' signatures ready to put 500% secondary tariffs on countries buying Russian oil if indeed Putin doesn't come to the peace negotiating table or agree to a ceasefire or some indication thereof. Finally, essentially pulling the rug out from under Trump in his policy of the last few months. Your thoughts on the outlook for that as a strategy, as likely the outcome and how significant it could be?
Yeah, I give it an actual zero outcome because the tackle term will come into place, right? Trump, again, chickens out because he knows that if he puts in a lot of constraints on sovereign countries, because Russia is independent, India is independent, China is independent, that the only way to enforce those sanctions is by having the US Navy selectively do something or other. But if you do that, the oil price will scream up, right? $100 is nothing. Then that will bite him in America, where he wants low gasoline prices. Therefore, he will tie himself in knots and do absolutely nothing because he actually wants low oil prices. So zero possibility of those things really being implemented.